meaningful one, really. Rupen Rajguru is with us, Head of Equity Investments and Strategy at Julius Baer. We also have Himang Jani, who's tracked markets for a long time, joining us now with some perspective. Gentlemen, good to have both of you here. Appreciate it. Rupen, if I can start with you, quick thoughts on the mid-cap and small-cap decline. And that is an area where Julius Baer works very closely. You've got a very large sort of coverage universe there. Give us a sense of the kind of damage you're seeing and what kind of conversations are going on. What's the dominant driver, if any?
Yeah, hi, afternoon, Prashant. In fact, from our own research perspective, we have been cautioning about the move which we are seeing in the mid and small cap stocks. So while from a company perspective and from the overall corporate performance perspective, there is not a significant change. But what happens is that when the overall markets get devalued, right? The segment of the market which has got significantly revalued is where we are seeing profit taking. And that is I would say that's par for the course. And see what had happened is that in the last 4 years, we haven't seen any meaningful correction in the market, right? I think barring month of October when Nifty was down more than 5%, people were not used to big corrections in the market. So I think this is something which usually happens with mid and small caps names. Whenever there is a little bit of uncertainty, I think that segment corrects the most. So from our perspective, we are sticking to our stance that this year would be the year in which the large cap will outperform mid and small cap names. And while 110 days is a too small a period time frame, but until and unless the overall earnings growth of the market, gets into a better trajectory, we believe the larger market would be in a range, and probably we are in the lower band of that range, and mid and small cap definitely will be under pressure.
All right. Hi, Rupen. Good afternoon. Good to see you, Ben. Rupen, give us a couple of targets then. On the Nifty, as you're mentioning, first half will be soft. You're hoping for a recovery in the second half. So for the year, what kind of return should someone be looking out for on the Nifty? And also in terms of your top sectorial bet, what could it be? Getting into this year, people are saying banks are well valued. There's plenty of opportunity out there. Well, that index is getting clobbered. Your view?
Yeah. Hi, afternoon, Nigel. Here, if you see from an index perspective, right, ultimately what we have to look into that, at what kind of valuation that index will find support. So say if I were to look through that, we were trading at almost at a 1 standard deviation higher than our long-term average. And if we get into our average, which is say 18 or 19 times, probably around, say, a tad lower than 23,000, say 22,500 or so, forms a very solid base for the market, right? Because that's where we will get the valuation support. Earlier, we had got re-rated because of the overall liquidity and, the movement in the market. So if you were to ask me strictly from a range perspective, this year we expect Nifty to be in the range of, say, roughly 23 on the lower side and 26 on the higher side. That would be the kind of range that we would look into for Nifty. From a themes perspective, Nigel, there are a couple of themes. One theme which I already mentioned about a large vis-a-vis mids. But from other themes perspective, I think one theme which is clearly we are seeing at ground levels, one is the rural recovery. We have not only seen in the corporate commentaries, but also at ground level, we are seeing some bit of up move. And with more money in the hands of people, thanks to the welfare schemes, I think the low-ticket consumption items should make a comeback. And in an uncertain environment, even staples serves as a defensive. So in the near term, probably staples will be looking good. The second theme, which we believe will do well in this current market, would be, the mid to late stage real estate related stocks. So that would essentially be building materials, home improvement companies, because coming towards the end of this year, we will see a lot of deliveries getting through on the housing side. So while last 3 years, a lot of pre-sales have happened, finally the houses are delivered and people go and stay. So then the spending towards all the home improvement related stocks, so be it the pipes company, the ceramic tiles, the sanitary ware, the plywood, all we believe should see a pickup coming, towards the second half of this year. So that's the other thing which we like. And purely from a sectoral perspective, I think while you mentioned about banking and financial, we continue to remain constructive on that. But probably we believe this year it would be more of a market performer, because while barring one bank, a lot of the other banks last year did well. So probably the largest private sector bank still definitely has some juice, but otherwise the banking sector will be a market performer this year.
Okay, so staples, you like some of those rural players, so two-wheelers as well is what you're looking at, and banks could be market performers. We got that correct?
That's correct.
All right. Hemang, coming across to you. Good afternoon. Thanks a lot for joining in. I wanted to ask you about Kalan Jewelers. What do you do with that stock? The update sounded good. It's actually outperformed what Titan as well has done. But clearly the street is very nervous on that stock. In spite of the clarifications coming from the management, street is not buying it.
Michael, I think some of these stocks which have run up quite a lot in last 1 year, and maybe my sense is that there may be a case of concentrated holding with some institutions or some HNIs, and maybe they are trying to basically exit, and the price impact is very high. The fact of the matter is that this theme has played out very well. The update has also been equally good, and it's not as if that the growth story is over, but it's a case of concentrated selling, it seems. So I would surely be looking at buying something like Senco, Kalan, even from a large cap allocation stock. I think Titan also delivered a very steady growth. So don't see any fundamental negative as such over there.
Got it. Okay. All right. One more stock, Hemang, if you could help us out with IRDA. The stock listed went all the way to 300. Now it's at 200, and these last quarter's numbers clearly look disappointing.
Yeah, so Nigel, I think overhyped kind of a story. The valuations, the overall expectations in terms of growth have been too high. Again, a case of concentrated holding. So while the numbers, NI level 38% growth doesn't look bad, but I think even at the initial stage, you're seeing, asset quality concerns, and how long this kind of a growth they will be able to sustain, one doesn't really know. So not too, positive on that per se. I think there are better opportunities in the listed space that one can really look at rather than buying IRDA at a very hefty price to book.
Okay, got it. We'll take a quick commercial break here. There's 9 minutes to go for close. And markets recovered a little bit. We're about 80 points lower. So from the low of about 23,340, we've come up a little bit or so at this point in time. So we'll see what the close actually is like. We're about 23,445, and the low is 23,344, beg your pardon. So yeah, it's about 100 odd point recovery from the day's low. Time for a break. As I said, we are back on the other side. More conversation.
Welcome back. Well, one stock that's seeing a bit of an uptick in the last few minutes is BSE. I think we should get the intraday chart on that stock up for you on the screen. Rupen, before we let you go, what's your view on some of these market-related plays? They've done quite well, and clearly the financialization theme will definitely play out. Your view on them?
Yeah, as they say, price is what you pay, and the value is what you get. So now everything is good but price. So whilst we are positive on the entire story, right? And what happens usually, market tends to extrapolate too fast, too soon in many things. So a lot of these capital market intermediaries, while we are part of that industry, and we are very positive on the long-term perspective of that industry. But in the near term, probably considering a lot of these companies' revenues are linked to stock market, so a lot of the transactional revenue definitely will slow down. And and I know a lot of these probably that penetration story because is also true, right? We have 18, 19 crores demat account, 20 crores mutual fund folio. So while it can definitely go higher, but still I think the early thing is already done. So from our perspective, in the very medium term, in fact, last time we spoke about it, we have take profits out there. We are significantly reduce our exposure there, and probably will wait for better entry price into that. So we love the long-term story out there, but we'll be cautious in the very short to medium term of that.
I'm just looking at some changes here from all-time highs, right? I mean, the Nifty PSU index, PSU bank index, beg your pardon, has basically lost about a quarter of its value. It's down about almost 25% from its peak, the PSU bank index there. And actually, topping the list is, the other one is the CPSE index, which is, of course, banks, non-banks, everything. That has lost about 23% of its value, CPSE, from its all-time high. What is done better, of course, is, by definition, the defensives. So the IT index is just 3% away from its highs, and the pharma index is just about 6% away from its highs. So there's the PSU pack on one side, and then there are, of course, these IT and pharma sectors, which are holding on very, very well. Rupen, in the IT services space, is there anything out there? Because we are, of course, on the cusp of the earnings season as well with what TCS has reported. Any thoughts?
So see, IT, if you look through, typically what happens in the market when there is maximum pessimism, and that's the time the sector bottoms, right? So before the actual good news, the stock actually, a lot of the stocks have gone up, right? For case in point, TCS, which came out with the numbers, while the numbers were still weak, but the commentary is kind of fairly positive. So here, a lot of these stocks have, they are good quality names. So in an uncertain environment, probably IT will be a good defensive. Plus, additionally, if the US discretionary spending, which is what the commentary also indicated today by TCS, is coming back, and add to it I think the important factor which we should not forget is the tailwind from weak currency, which is a stronger dollar, should also lead to better margin profile. So overall, they are fairly valued, and probably they have bottomed from an earnings perspective. But some of the names out there, from the moves which we have seen, we don't see a big upside, but I would say they are not a bad stock to own in an environment wherein, things are, macro is looking not that great.
Okay, all right. Very quickly, before we let you go, Hemang, your view on DMart?
Nigel, I think the update was good, but my sense is that the quarterly numbers, you might see a bit of pressure on the margins. The street is working with some 8.2% kind of a margin. The actual margin will be much less. So, which is why probably we are seeing weakness in the stock. And I think the disruption broadly is also very much there. So, I don't think there is a case for buying into something like DMart at this point.
Okay, all right. So the operational update was good, but that can be a margin miss. Well, we appreciate you all joining in, both Rupen as well as Hemang. Thanks a lot for joining in and filling us in with your take on the markets.